And to your viewers as well. Yes, well, first of all, I think just a bit of perspective. Letter of dissent, and by the way, he sent almost an identical one to the EU earlier this week, says things such as a tariff of 30% separate from all sectoral tariffs. That makes it a bit unclear as to whether he's really going to tariff everything at 30%, or will it exclude things such as natural resources, platinum, and the like. But be that as it may, the biggest impact is bound to be on our agricultural sector, on our automotive sector, and possibly then some of our manufacturing sector. Around about 7% of our export revenue is derived from America. It's an important 7%, but it's way less than this figure, for instance, for China. And on the whole, it probably won't have a major impact on the economy, except for those sectors that will be affected negatively. Now, we also need to consider the wording and the very strange language used in this letter. And I quote, "We want you to participate," says Mr. Trump, "in the extraordinary economy of the US, the number one market in the world by far." It's not our number one market. It's our second biggest destination for exports. And it's interesting that the value of our exports to places like Mozambique, Botswana, and Namibia, add that up, it's more than actually what we earn by. Further strange words he used is the deficit between us, or between him and us, is a major threat to the US economy. Indeed, it's a threat to our national security. Now, by no stretch of the imagination can that be seen as a threat to the American economy. We're talking about a deficit from their perspective around about 30 billion rand, which is barely, $1.5 billion. That cannot be a threat to their economy, nor to their national security. Having said that, it is a big deal for South Africa. Obviously, 30 billion rand might not be much for America. For us, it is a big amount. What's also very unclear and very silly, really, economically speaking, is the argument from his side that by introducing tariffs, that alone will reduce the deficit. I mean, the whole dynamics of exports and imports go way beyond just tariffs. He also claims that the formula he's using is an appropriate one. Well, it isn't. It doesn't make any sense at all. He's simply taking some kind of weird formula and assuming that will do the job for him. And besides, even using that formula, I've looked at the last couple of years, you get nowhere near 30%. And then finally, just to show more of the almost the arrogance and the naivety, he is claiming that he needs to introduce these tariffs against us because we, I am quoting him, impose tariffs and other measures against imports from America. Now, again, that's simply not entirely true. Most of the stuff that we import from America is tariff-free in any case, especially with the exception perhaps of the automobile industry. So really, it's all based on a false sense of information, exaggerated terminology, and he even has the arrogance to say right at the end that if we were to open up our trade to America, we will perhaps consider an adjustment. And then his final words, "You will never be disappointed with the USA." Having said all of that, I think in any case, with or without these steps, it just makes good sense for us to diversify our trading partners, as we have been doing for a number of years. I've already mentioned China, already a much bigger trading partner than America, both on the export and the import side. I've just mentioned Africa. And we need to also, I think, consider the African Continental Free Trade Agreement and the benefits that could bring to us and the rest of Africa, other countries in Africa. There's a way of diversifying export markets. Meanwhile, the EU and the UK have always been and probably will remain major partners. We have the BRICS club. Now, that becomes problematic. It is a potential market for our goods, but as you would have known, he didn't say so in the letter, but earlier this week he said any country which aligns itself or is part of BRICS, he might add another 10% in terms of tariffs. But I think we have to call his bluff and deliberately diversify our suite of export and import partners. Just one final comment at this stage, and that is, we talk about exports and imports of goods. We also export and import services to and from America, things such as tourism and the like. And in actual fact, there, we have a deficit with regard to America. He's not even talking about that. It's equally important. Over to you.
You know, Prof, you mentioned BRICS as well, and also while we're talking about diversifying our trading partners too, we already have this home within BRICS where it's kind of easier access. You mentioned China, which is also one of our big trading partners, a member of BRICS too. But Trump has, as we know, been very anti-BRICS, going as far as threatening, additional 10% tariffs for those countries that affiliate with BRICS. BRICS hit back, calling these tariffs, inconsistent with the WTO rules. So what is this going to do for this growing tension between the BRICS countries and the US?
So BRICS countries and a few others perhaps as well. But certainly, yes, BRICS is hit. So is the EU hit back. So is Canada. I mean, they're all in the same boat in a certain sense, and they all find the whole story rather ludicrous and doesn't make much economic sense. So I think, yes, so if he wants to retaliate by adding another 10%, well, so be it. I mean, as it is, as I said already, China is by far a much bigger trade partner. So China is our biggest export destination, America number 2. On the import side, we import far more from China than we do from America. I think America is number 4 there. So there's no way that they are, in any case, our biggest trade partner if you take into account both exports and imports. So we're already diversifying. I've mentioned China. We can mention India, countries in Western Europe, countries in Africa. I mentioned Mozambique, Botswana, Namibia. So as I said, we need to have a far more, I would almost say, geographically widespread diversity, as do all countries. I mean, I don't think we should be fixated on the fact that without America, we're going to crumble up and die a slow death. It'll be inconvenient, certainly, and I take nothing away from the potential misery this could cause to some sectors in our economy. Agriculture comes to mind, I mentioned earlier. Our citrus industry will take a hard blow. But we need to, as I say, we just simply need to find alternative markets. And by the way, even with high tariffs, we seem to be assuming that America will stop buying our goods altogether. They probably won't. They probably will still carry on importing, perhaps a little bit less. The volume might be a bit lower, but it's not as if they're going to cut off our markets. They'll be cutting off their own nose to spite their face. They need some of our things desperately.
Yeah, one can think of something like our wine as well, which they do import quite a bit of. But there have been protests in Brazil over the tariffs and talk of reciprocating. Would you say that this is the way of asserting a country's sovereignty or not the way to deal with a leader like Trump, who we know is quite unstable, volatile as well?
Yeah, I'll be careful on the air. But I don't think we should play this, what they call the tit-for-tat game. There are only losers. There are no winners in a tit-for-tat game. And given his own volatility, as he's already pointed out in that letter, if we were to raise our tariffs in retaliation, he will raise the 30% to a further higher number in accordance with the amount that we should raise ours. You see, the bottom line is that tariffs, protectionism, ultimately there are no real winners. Well, let me rephrase that. There might be some winners in terms of domestic producers, but the losses incurred by consumers in the importing country are much greater than the gains earned by the producers. Nowhere has this kind of system ever really had a beneficial impact. And it goes beyond that. If tariffs in America rise, then obviously it means that Americans pay more for imported goods. That means their own inflation rate might start moving upwards again. That means that interest rates in America might either not drop any further or might even go up a bit. And that will then disrupt the entire global financial system. We all know, unfortunately, the old saying, if America sneezes, many other countries catch a cold. Some even get pneumonia. That fact, I'm afraid it's still true. So really, it's what we call a zero-sum game. He might buy political brownie points among some of his own constituents, but in the long term, it's bound to have a more negative impact. And it just creates even more geopolitical uncertainty. The story of trade wars comes to mind again. And that alone is problematic. Add to that the obvious other ones, the Middle East crisis, the war in Ukraine. All of that is creating this air, this veil, global uncertainty. And no country in the long run can really prosper from that. So it really is, I must be careful again, it really is economically difficult to justify, which possibly means it's more about, let's call it, political punches he's trying to square up with. He's probably trying to change countries' behavior in a different way. So Canada, he keeps referring to imports of illegal drugs. We all saw the audience in the White House with our president and a few other delegates a few weeks ago. He's probably got other things in mind, not just pure economics. His economic thinking is simply not sound. It is, frankly, rather irrational.
Prof. Roux, thank you so much for your insights and sharing your thoughts with us on this evening.
Imagine waking up to discover that the goods your country sends overseas are suddenly slapped with a 30% tariff. That's exactly what South Africa is facing right now, after U.S. President Donald Trump announced yet another tariff targeting South African exports. The new rate kicks in on August 1st, and it's sent shockwaves through South Africa's trade and economic circles. Trump says the U.S. buys less from South Africa than South Africa buys from them. In his view, the trade relationship is unfair and needs to be rebalanced. But is punishing South Africa with steep tariffs the answer? Or is this another example of power politics, where smaller economies get squeezed for leverage? Let's break this down. South Africa has long relied on access to U.S. markets through programs like AGOA, the African Growth and Opportunity Act. That's allowed duty-free access for products like citrus fruits, vehicles, wine, and textiles. But now, with the stroke of a pen, a 30% tariff threatens to make those products unaffordable in American stores, potentially wiping out jobs and cutting billions from the local economy. It's no wonder economists are alarmed. Professor André Roux from the Stellenbosch Business School says this isn't just about the US, it's about dependency. He believes South Africa has waited far too long to diversify its trade portfolio and reduce its over-reliance on the American market. And now we're paying the price. According to Roux, this is a wake-up call. South Africa needs to forge new trade alliances, not just with BRICS countries like China, India, and Brazil, but also with emerging economies in Southeast Asia, Latin America, and even parts of Eastern Europe. These are markets hungry for high-quality agricultural products, renewable energy tech, and mineral resources, all areas where South Africa excels. But it's not just about exporting more. South Africa also needs to become more competitive. That means investing in infrastructure, lowering the cost of doing business, and building trade agreements that protect national interests while attracting long-term partners. At the same time, we can't ignore the politics behind Trump's decision. His administration has made it clear that economic policy will serve political goals. Trade is no longer just trade, it's leverage. And South Africa, like many other nations, is caught in the middle. Still, this could be an opportunity in disguise. What if this tariff shock forces South Africa to finally shift gear, to stop looking at global trade through a narrow US-centric lens and start playing a smarter, more strategic game? What if we take this moment to strengthen intra-African trade, boost regional value chains, and become less vulnerable to the whims of foreign presidents? As August 1st looms, businesses are scrambling. Farmers are worried, exporters are recalculating, and economists are warning. This won't be the last time South Africa is targeted if we don't change course now. The future of our trade doesn't have to be defined by tariffs or threats. It can be built on partnerships, innovation, and resilience. But only if we take this moment seriously, and act fast. South Africa has what the world wants. Now, it's time we start acting like it.